So good afternoon, everyone. So just to recap, in terms of our schedule, for 99.1, so we'll have two quizzes again on AR. The first being Monday next week. And then kindly note that we have an AR exercise part 1 that's due before our Thursday class. So don't worry. I made sure that my conceptual lecture today will enable you to answer the exercises for part 1. Pero please make sure na you really get those exercises. And then in our Thursday lesson, we'll tackle that quickly and then I'll share some extra examples for you to use as reference also. But ang importante nun is that you'll be able to solve it for yourselves. So as long as you do well in the exercises, then and you listen well in terms of today's lecture, you'll be able to be confident about the theory and the short probs of our AR quiz 1. So with that said, in the second part of BA 99.1, we're already done with cash last session. And now we're proceeding to the second topic out of the three, which would be accounting for receivables. So similar to cash, actually receivables is a very broad topic. But in terms of the flow, we're gonna follow the same strategy. So I'll give you an overview on what are the topics that you can expect from AR. So number one, for receivables, there are different types of receivables. The two major classifications of receivables would be your trade and non-trade receivables. Under trade, you'll have your accounts receivable, your notes receivable, and then aside from trade receivables, you'll have non-trade receivables, which are your other receivable topics. Now, for your two quizzes in AR, the first quiz will really focus on accounts receivable. So for this week, what we're gonna be focusing on would be how do you account for AR. Next week, we'll be tackling NR or notes receivable, and then other important topics when it comes to receivable. So today, we're gonna be focusing on what are the short problems or what are the examples that we need to master. So number one, we'll need to learn how to account for accounts receivable. Like how do you measure it initially? What is the subsequent measurement and how do you actually dispose of AR? We'll also tackle credit card sales. And then the bulk of today's discussion is understanding two concepts, BDE or bad debt expense, and second, ADA or allowance for doubtful accounts. So for me, as long as you master the T accounts for BDE, ADA, and AR, receivables should be a very easy topic for you, at least for the first part. Notes receivable, let's talk about it next week. Right? So now that we're clear about the learning objectives, let's take a step back muna and let's define what are the different types of receivables. So going back to your financial statement, the very first line item would be your cash and cash equivalents. So in cash, we only had one line item to represent cash and cash equivalents. The next portion na susunod sa cash would be your different types of receivables. However, unlike cash, receivables could have numerous line items. You could have AR or accounts receivable, you can have notes receivable, you can have interest receivable, and you can even have advance to employees. But generally, when you say receivable, as the name suggests, you are expecting to receive money from it. Technically, the other party, meron siyang utang sa'yo, right? So now, in order to make sure na we're aligned in terms of the definition, receivables are any amounts due, whether it's from an amounts due from individuals or amounts due from companies. And in essence, these are claims na you expect to be collected in cash. So in essence, usually, when you sell a merchandise or you sell a product or you sell a service, the end goal mo naman talaga is to receive cash. But sometimes, in the normal operating procedure of your business, rather than paying you directly in cash, we all know this, people can just say na mag-issue ka na lang ng AR, right? So you'll have an accounts receivable in the middle. So technically, before the revenue turns into a cash, it still becomes another asset, which we call a receivable, right? So now, the question is, this is the broad definition. What are the different categories? There are two major categories of receivables. You have your trade receivables, and then you have your non-trade receivables. Again, this is a very important concept to understand and to master. You have two major classifications of your receivables. Your trade receivables pertain to those that arise usually from sale transactions or from business operation. Again, trade receivables are those receivables arising from sales transactions or business operations. And under trade receivable, we'll have our two major types, our accounts receivable and our notes receivable. Okay? And then the one on the right will have your other receivables would be your non-trade receivables. So what are non-trade receivables? Non-trade receivables are those that arise or claims that arise not from the ordinary course of business or operations. Okay? So again, if they ask you how do you classify AR and notes receivable, you'll say that they're trade receivables because they arise from sales transactions or normal business operations. Now, on the other hand, you have your other receivables, which are non-trade. So examples of these would be interest receivable, loans to company officers, advances to employees, and the like. So all of these are still assets, but all of these are also other types of receivables. So clear. Now, let's focus on the three different types. So AR and NR represent your trade receivables, and your other receivables, meron kang different examples. Let's first focus on AR. So AR is source ng AR would be typically when you sell goods or services. Remember in inventory, when it's a credit sale, then the journal entry would be debit AR credit sales revenue. Usually, the collection of an accounts receivable would range around 30 to 60 days. Okay? And then AR usually has no interest, right? Usually has no interest. For notes receivable, unlike AR that arises from sales of goods or services, a note receivable arises from a formal instrument of credit. So para kang nagpautang formally. So in terms of the collection period, it usually takes around 60 to 90 days or longer. And then please take note that for notes receivable, primarily, its unique feature is that it has interest. So pag may notes receivable, since matagal mo pinapautang, you expect a compensation in return in the form of interest. So again, to summarize, you have trade receivables comprised of your accounts receivable and notes receivable, and non-trade receivables comprised of your interest receivable, loans to company officers, and advances to employees. So are there any questions when it comes to classification? So importante to master this, particularly for mga theory questions and the fundamentals of understanding our short problems, right? Kindly let me know if there are questions in the chat. If none, then we can proceed na to accounting for accounts receivable. So for accounts receivable, basically, you can break down the recording process into three major phases, similarly to inventory, right? First, we have our initial recognition, and these are the concepts that you should really master. So, sale on account, when there's an SRA, when you collect AR, at a discount, and then you have your finance charge, right? Aside, after you initially recognize, so meron ka ng mga receivables, you need to subsequently measure this using either two methods. your direct write-off method, or your allowance method. Dito papasok si BDE and si ADA. So, initial recognition, papasadahan lang natin to ng mabilis. Ang importante dito is you understand the ART account and also the journal entries for initial recognition. For subsequent measurement, it's super important that you master the T accounts for allowance for doubtful accounts or ADA. And then for disposal, it's just super important that you understand how to account for factoring. Kasi si discounting, you just have to understand ano yung difference niya. But primarily, si factoring yung i-focus natin. So again, don't get intimidated. Just think about it as, okay, we're done with the theory of understanding what are the receivables. In terms of short problems, we can break it down into 3 phases or the recording process. First would be initial recognition, na typical journal entries. Second would be subsequent measurement, which would be the focus of today's lecture. Third would be disposals, or discounting, or factoring AR. So kindly make sure to write down this roadmap when we're gonna be tackling in the next few slides. Kindly give me a moment. I will just fix something on the screen. Okay. So with that said, so now that we're clear about our recording process, let's now take a deep dive into first initial recognition. So for initial recognition, basically the very first thing that I want you to master would be, if they ask you, how do you recognize accounts receivable? The very first thing that you'll have to answer is that you measure accounts receivable at fair value at the point of sale. So again, you recognize your AR in initial recognition at fair value at the point of sale. So actually, we're familiar about these 2 journal entries. So flashback to inventory. Basically, the typical journal entries to record AR will come from a sale on account or on credit. So for this, take note that the journal entry would be debit AR, credit sales revenue. And then, kindly take note na paano kung merong inventory return. So echoing sa SRA or sales return and allowance, it's gonna be debit SRA, credit accounts receivable. So let's look at an example. So let's say that December 1, RR Fudge Corp sold to Padico tote bag merchandise for 120,000 terms 5, 10, and 30. And then si Padico returned 20,000 worth of accounts receivable. So the journal entry for this, I think everyone should be familiar, would be debit AR of 120,000, credit sales revenue of 120,000. So first journal entry in initial recognition, tumaas si AR account natin. Now, it said that Padi returned 20,000 worth of AR. So return means a sales return and allowance. So the second journal entry na we have to take note is that the customer returned goods. So it would be debit SRA, credit accounts receivable. So now, dahil nag-return ng goods, bumaba yung expected receivable natin. And therefore, sales returns and allowance lowers down your accounts receivable. So now, in the second part, and I think yung learning from the midterms, super important for you to understand T accounts, right? So after you understand the transaction, make sure na you can also imagine it in T account form. So number one, refresher sa AR, since it's an asset, the normal balance of your AR would be a debit. Now, what are the things that increases AR and what are the things that decreases AR? So that pag may bungi or parang merong missing or may X inside, you'll be able to solve backwards. So number one, anytime you have a credit sale, so it's a credit sale, it increases your accounts receivable. So it's a debit in your T account. And then every time there's a return, every time there's a return, there is a credit AR or bumababa si AR. So if you had a starting balance of 0, it had a plus 120 debit minus 20 credit, you'll have an ending balance of 100 in terms of your AR. So to summarize, every time you have a credit sale, your expectation is AR will increase, the AR balance. Every time you have a sales return and allowance, you expect AR balance to decrease. Okay? So, one of the things na palaging tatanungin in AR problems would be, what is the balance of your accounts receivable? And therefore, our number one tool to answer that would be our T accounts. So again, sales, net credit sales, increase AR, sales return and allowance, decrease AR. Next, the last 3 journal entries that you have to know under initial recognition would be, paano ba pag nag-collect na tayo ng AR, right? So, basically, there are 3 scenarios when you try to collect your accounts receivable. Either A, your customer or your or the company paid early. So if they paid early, meaning they paid within the credit terms, so again, call back to inventory, may credit terms. So if you pay within the period, you get a discount, right? So this would be the journal entry. Debit cash, debit sales discount, credit AR. So si AR, i-recognize mo lang yung related AR, pero yung cash amount mo will be subtracted from the sales discount, right? Now, if you pay within term, ito yung pinakamadali. It's just debit cash, credit AR. Now, if it's late, some companies will apply a finance charge na parang, grabe ka, pinaghintay mo ako ng matagal. So, because of this, there are certain companies that will apply a finance charge. So, a finance charge must be explicitly stated in a problem. But in essence, a finance charge would be, kuwari, nagpautang ako sa friend ko. Nagpautang ako ng 100 pesos. And then I told them, I'll need the 100 pesos by Christmas. So, may 30 days siya to return the 100 pesos. Now, Christmas, tapos na yung Christmas. Tapos na yung January. Valentine's, tapos na yung February. By March, I'm like, grabe ka naman, hindi mo pa sinusoli yung 100 pesos ko. So, I'll apply a finance charge or an interest on that so that you pay me more because you haven't paid me within a reasonable amount of time. So, if I apply like a 5% finance charge on that 100 peso utang, I have a 5 peso. So, what I expect is he'll pay me 100 pesos, but an additional 5 pesos for making me wait. That 5 pesos is an interest income on my perspective, but it's a finance charge on the person na I lent money to. So, again, since we're an accounts receivable, we're in the perspective of the person collecting money. So, a finance charge will have a credit interest income. So, kindly take note, kapag may nakalagay na finance charge, we're the one collecting. So, now, the journal entry would be debit AR, credit interest income. So, tataas yung receivable na we're expecting because we're not only expecting to receive the 100 pesos, but we're also expecting to receive an interest or an interest income of 5 pesos. Right? So, these are the 3 other journal entries you have to master for initial measurement. So, for example, let's say collecting AR with discount. So, sa December 4, Padico fully paid the outstanding AR to RRC Pudge Co. So, how did we compute for this? Yung AR natin was 100,000 because 120 yung initial pero nag-return sila ng 20 na SRA. So, our balance is 100,000. Now, our AR is 100,000. But then, it said na if they paid within 10 days, we will get 5% discount. So tapos na natin yung credit AR. Ang pagtatalunan na lang is ano ba yung debit? The debit would be 100,000 times 0.5 is 5,000. So we have a sales discount of 5,000 na debit and therefore isi-squeeze na lang natin yung remaining cash. Na to make the journal entry balance, it's 100 minus 5. So 95. So take note na as you notice, the sales discount lowered the amount of cash na we were received, but the sales discount didn't lower your AR. Again, the sales discount did not lower your AR, right? Let's go to scenario 2. Let's say they paid pero no discount. So the journal entry here is straightforward. Credit AR of 100,000, debit cash of 100,000. So here, I want you to look at the T account. So, in the two scenarios, pareho sila ng credit. Even if you take the discount, even if you did not take the discount, your credit to your AR will remain the same. So, 100,000. So now, we have another rule. Every cash collection will lower your accounts receivable. However, kindly take note that sales discount don't lower your AR. So again, sales return and allowance lowers your AR, but your sales discount does not lower your AR. So again, super important for you to master that. And then let's just complete initial recognition. What if in the third scenario, rather than paying in full, in December 8, the company had a 72% partial cash collection. Let me give you those. I'll just charge. Okay, so now the last scenario is they paid late. So in December 8, Podico had a 72% partial collection. So the journal entry here would be debit cash, credit AR of 72,000. Why 72,000? Again, what was the balance before any collection? The balance was 100,000. So times 72%. So you'll have 72,000 collected. So now, here, if we go back to the scenario, your AR will lower by the partial collection of 72,000. Now, 28,000 yung AR natin. Why? Because, again, if we summarize what happened, you started with 120 AR. You started with 120 AR. You subtracted 20 from sales return and allowance, and then you had a partial collection of 72. So right now, your current AR balance is 28,000. Now, we go to the second part of the problem. Podico was charged a 2% finance charge on any late outstanding receivable. So si Podico, yung utang niya, na-chargean siya ng 2%. So therefore, we first ask ourselves, what is the balance? So we have 28,000 na balance. and then we had the finance charge of 2%, and therefore the interest income that we're looking for is 560, right? Why? Kasi, again, to summarize, it's 28,000 times 0.02. So 560. And therefore, our last journal entry would be debit AR of 560, credit interest income of 560. So now, by adding this journal entry, we have an increase in your ART account of 560. And now our new ending balance is 28,560. So not only are we expecting to collect 28,000, but the additional finance charge represented by your interest income of 560. So in summary, this is the master slides that you have to memorize. Number one, AR is initially recognized at fair value during the point of sale. Second thing you have to master, please master how to make the T accounts for AR. So ito yung guide. Every time there's a credit sale, it will increase. Every time there's an SRA, it will decrease. Every time there's a finance charge on a late collection, it will increase. And then every time there's a cash collection, it will decrease. Please take note that sales discount generally don't have an effect on your AR balance. So again, one of the most common things na hanapin sa inyo during accounts receivable would be what is the AR balance or what is the AR net balance. So please be an expert in accounts for AR. And then to summarize, these are the things na you need to take note of. So journal entry on sale on credit, journal entry on SRA, and then the three scenarios when you're collecting AR. So what's the journal entry if there's a discount? What's the journal entry if there's no discount? And then what's the entry if merong finance charge for a late collection? So we're done with the initial recognition. So very simple, very straightforward. Memorize the journal entries, understand the business transaction, and then please be a master in creating an ART account with the following guide. And then know by heart that initial recognition, AR is measured at fair value. So now, we're done with initial recognition. The next thing that we want to discuss would be subsequent measurement. So now, we can look at sample balance sheet. And then if you look at the asset portion, you have accounts receivable, where there's this word called net. So now, we know that subsequent measurement ng accounts receivable would be in its net realizable value. So AR initial measurement is fair value, but the subsequent measurement should be at net realizable value. So ang AR should be reported at what it's called the cash NRV, or the value for which AR is expected to be collected in cash. And therefore, one of the things that you need to be aware of is what we call impairment loss, wherein at the end of each reporting period, entities are required to assess whether there is objective evidence that receivables are impaired, or what you mean by unlikely to be received. So now, when do we have an impairment loss? When your carrying amount of your AR is less than the present value of your estimated cash flows, then you will report a loss in income statement. So this one, I think more i-discuss to more in BA 99.2, but for 99.1 purposes, just be aware that there's an impairment loss that happens at the end of each reporting period. And then please be aware on when to recognize an impairment loss. So master na there's an impairment loss when the carrying amount of AR is less than the present value of estimated cash flows from receivable. But aside from this, to make the accounts receivable down to its net realizable value, there is this concept that we have to master called bad debts expense. So in essence, the difficulty in reporting AR is that sometimes some receivables will become uncollectible. So what I'm saying is that, di ba, we have our revenue, and then 100% of our credit revenue will have receivables. However, in the real world, hindi naman lahat magbabayad ng receivables. There will be some customers, there will be some companies that will not pay their receivables to your company. And therefore, when those things happen, we need to account for those receivables that will become uncollectible. And we need to account for it under bad debts expense. So the bad debt expense is usually reported as an expense in the income statement. And the bad debt expense is normally categorized as a selling expense. Okay? So I understand that it's kind of hard to understand this new concept. So let's look at this example to understand bad debts concept. So please, ito yung portion ng lecture na pag hindi nyo na-gets, you can PM me or you can unmute and then ask me a question. Ito na yung parang kailangan master natin. Kasi BDE, ADA, this will be the lifeblood of your quizzes and your exams. So this is the important concept for today. So imagine you wanted to see the UP versus Ateneo game in Araneta. And then since ikaw yung may credit card sa friend group nyo, you were the one tasked to buy the 5 upper box tickets costing 350 each. So for the sake of this scenario, let's just imagine that we're a company and that these friends are accounts or clients, right? But in essence, since we spent 350 times 5, in the lens of a company, technically, we have an accounts receivable of 1,750. Now, we expect to collect 350 from A, 350 from B, from C, from D, and from E. But in the real world, the problem when it comes to receivables is that sometimes hindi lahat magbabayad. Out of these 5 clients or out of these 5 friends, probably a portion of them will never pay you back. So let's say that si B and si D, parang napikon sila because of the outcome of the game. And then they said, hindi, ayoko nang bayaran. Parang, I'll never pay you back. So itong, out of the 1,750, we have 2 clients, si B at saka si D, that will never pay us. So it doesn't make sense na we're expecting na may asset pa tayong receivable when in fact we know that we're never gonna receive a money or any amount of compensation from bad debts or from doubtful accounts. So, in a sense, si B at saka si D have bad debts or they are doubtful accounts. Parang they're unlikely to be collected. And therefore, the 2,350 from them will be treated as a BDE or a bad debts account. So rather than a revenue from us, may expense pa tayo. It's a bad debt expense is because it's an expense that came from bad accounts or bad debts. Dapat pala hindi mo na pinautang si B at saka si D. Kaya siya BDE. Kaya ang BDE is expense. So you'll never collect them again. So take note, for BDE, it's an expense and that your BDE lowers your AR somehow. May correlation, but you'll see kasi that there are 2 ways to estimate BDE. But generally, your BDE will have a net effect of lowering your AR, right? But let's be careful about this statement, right? So let's not generalize. Please pay attention to the 2 methods that we'll be discussing in the next few slides. So the question is, okay, do you understand what a bad debt expense is? Bad debt expense is that your AR is a collection of claims. Claim 1, claim 2, claim 3, all the way to claim 100. Now, in the realistic world, not all of those claims, hindi lahat yun magbabayad. So the portion na hindi magbabayad or will be uncollectible, we need to take into account it as a bad debt expense. It's no longer an asset, it's now an expense because it's an expense because pinautang natin the wrong people, right? So now, the next question is, how do we estimate your bad debts? Now, there are two methods. I will be sharing with you the direct write-off method and the allowance method. Pero, spoiler alert so that you know already what to focus on. The direct write-off is not allowed in accounting and will focus on allowance method. But, you need to be aware pa rin how to account using both, right? Pero again, at the start pa lang, I'm telling you already, direct write-off is wrong. Allowance method is the one that will be followed. So now, let's take a deep dive. So there are two ways to estimate bad debts: direct write-off and allowance method. So sa direct write-off, you only write off AR when it's actually deemed uncollectible. So the keywords here is that it's not an estimate. We're talking about actual losses. So pag direct write-off method, you only account for actual losses, not estimates. You only write off AR that is actually deemed uncollectible. Now, the problem here is that it does not follow the matching principle, that the bad debt expense does not match your sales revenue, and that's why it's not followed. On the other hand, your allowance method estimates. So sa allowance method, it estimates uncollectible AR at the end of each period. And then, it shows AR at cash NRV or it highlights lang yung estimated losses. And then, it follows the matching principle. And that's why this one is correct. So in summary, what are the major difference? In direct write-off, you recognize BDE only when it comes to actual losses. Okay, again, for direct write-off, actual losses. Kailangan actual. Actually deemed uncollectible. For allowance method, estimate. Okay, allowance method, estimate. So it creates allowance for doubtful accounts at the end of each period. So again, direct write-off, you only recognize BDE during actual losses. And then on the other hand, for allowance method, you create an allowance. So you recognize BDE upon estimates. Okay? So now, let's first figure out paano ba mag-write ng direct write-off method. So actually, direct write-off method is more straightforward than allowance method. But again, this is not accepted. So direct write-off method, basically, you have two journal entries. One is that when it's actually deemed uncollectible, you call that a write-off. Nire-write-off mo or tinatanggal mo si AR. And then, there are some instances na kala mo hindi mo na mako-collect pero in the end, nagbayad pa rin pala. So, we'll have like a recovery account wherein it's like a paid AR written off. So, to establish this, kindly take note na the bad debt is deducted straight from AR. So, it lowers AR definitely, right? And in the direct write-off method, it deducts straight from accounts receivable. So, let's look at this example. So, si RR si Pajco collected from customers P, U, and C 1,440, 1,3, and 500. And they determined that the following accounts will no longer be collectible. Since it says will no longer be collectible, this refers to actual losses. Since it's an actual loss, that is the prerequisite or that is a write-off. And therefore, our journal entry for this is debit BDE or bad debt expense, credit AR of 3,240. Because that's just basically what? 1,440, 1,440 plus 1,3 plus 500. 3,240. Now, let's say na shock si customer U pala paid off the 1.3. Parang it was collectible pa pala. So, in journal entry 1, na-write off natin yung 1.3. But now, since nagbayad siya, we'll debit cash because we receive cash, but we'll lower our bad debt expense by 1,300 because the 1,300 is no longer a bad debt expense, right? Because they actually paid. And therefore, we have to lower the bad debts by 1,300. So again, in the direct write-off method, the BDE is subtracted directly from AR. Okay? So it's subtracted directly from AR. Are there any questions for direct write-off method? Clear pa naman so far. Kindly thumbs up if everyone can follow ba. Okay, so clear tayo. So in direct write-off method, again, this is not followed. Ang susundin natin is the allowance method. So now, let's appreciate the difference. Sa allowance method, there is a journal entry for when you have estimate. So kahit estimate pa lang, you create a journal entry. And the journal entry would be debit BDE, credit ADA. Now, this is another new account, your ADA account. But in essence, you can think of it as your allowance for BDE or allowance for doubtful accounts, meaning lahat ng BDE papasok yan sa ADA. Right? So, rather than AR, we credit ADA during allowance method. Now, if it's written off, meaning from estimated losses, naging actual losses na siya because it was deemed no longer collectible, that's the only time that your ADA will be debited and then you will credit your AR. So, in essence, yung ADA natin is like a middle account or a contra account for AR. So now, super important for you to understand that the reason why nakalagay account receivables net is because there's a contra AR account called ADA or allowance for doubtful accounts. Now, if you have an AR of 1,969 less your ADA of 137, your net accounts receivable would be 1,832. So, in essence, what we're saying is that more than the AR balance, ang hahanapin sa inyo in the quiz or in the exams would be what would be the net accounts receivable? And that would just be AR minus ADA is equal to your net accounts receivable. That's the time you can be sure na it's reported at cash NRV or its net realizable value. So again, ADA is a very important account. And again, when they ask you what is the AR net or the net accounts receivable, it's AR minus ADA is equal to your net accounts receivable. So please master this concept. BDE, ADA, and AR. So now, in the allowance method, these would be the journal entries. Again, when you estimate uncollectible amounts, you credit ADA, and then pag write-off, that's when you debit ADA and then directly subtract from accounts receivable. And then, if naka-collect ka ng AR that's deemed uncollectible, these are the two accounts that you need to do, or two entries. Debit AR, credit ADA, so binaliktad mo lang yung write-off. And then you collect cash, cash AR. So in terms of recovery, there are two entries palagi under allowance method. Reinstate the AR deemed uncollectible and then record cash collected. So in summary, when we're looking at our allowance for doubtful accounts, these are the most important things to remember. Number one, your ADA is a contra account receivable account. So if people ask you, what is the net AR? It's always gonna be accounts receivable minus ADA is equal to your net AR. Since it's a contra asset account, the normal balance for an ADA would be a credit. The reason why I'm highlighting the normal balance is because generally, ang ADA can have a debit or credit balance before adjustments. So please understand that since it's a contra asset account, the normal balance is a credit account. The normal balance of ADA is a credit account. What are the things that affect ADA? Based on the journal entries, when you recognize a bad debt expense, your ADA goes up. When you write off, your ADA goes down, so that formally, dun mo na tinatanggal si AR. And then the third is pag nagbayad pala yung deemed uncollectible, there's a recovery, so i-increase ulit si ADA. So I understand it's a bit too much, so let's look at it from an example perspective. So let's say na the new scenario is that RR Sipaj company has 10,000 pesos worth of AR. And then they estimated the following accounts as uncollectible. So here, the journal entry is, since estimated losses pa lang, then it's debit BDE, credit ADA of 5,000. Right? Why 5,000? Because we have 1,440 plus 1,3 plus 500 is 3,240. But then may isa ka pang estimated account from customer Y na 1,760. So for this journal entry, it's merely an estimated loss. Merely an estimated loss. Estimate. In this, so in terms of the ADA P account, kindly take note that when you recognize a BDE or when you have estimated losses, it will increase your BDE. So if our BDE, if our ADA has a credit balance of 0, because we recognize a bad debt expense, tumaas si ADA ng 5,000. So right now, my balance for my ADA is 5,000. Next, in December 10, after exhausting all means, no longer collectible. Since it's no longer collectible, this is actualized loss, meaning we have to write off. When you write off, the journal entry for writing off is debit ADA, credit AR of 3,240. So out of the 5,000 na estimated losses, yung 3,240 lang yung actual losses. So since it's an actual loss, we have to write off. So that's debit ADA, credit AR of 3,240. So again, in the T account, a write-off will lower your ADA. So from the 5,000, nasubtrakan tayo ng 3,240 na debit. So our current ADA balance is 1,760. And then last scenario is that after mong ma-deem na uncollectible yung 3 accounts, si customer U pala paid off their written account of 1,3. So here in the third journal entry, dalawa yung journal entry natin. One is reinstate the AR. So debit AR, credit ADA of 1,300. And then we collect the cash. So debit cash, credit AR of 1,300. So now, in the T account, what affects the ADA is the reinstatement of the AR during recovery. So recovery increases your ADA. So now, our ADA is 3,060. Finally, let's look at the AR. Ano ba yung mga journal entries from that scenario that affected AR? Una, nung it was written off, that's the only time it was recognized in AR. So credit 3,240. Next, yung AR mo when it was reinstated or recovered, nagkaroon ka ng debit AR and then nag-collect ka finally ng 1,3. And therefore, our ending balance for your AR for this sub-problem is 5,460. So now, if I ask you, what is the net AR? Your answer should be, my AR balance is 5,460. What are the things that affected my AR? I had the beginning balance of 10,000. I wrote off 3,240. I collected 1,300 and then I recovered 1,300. So ultimately, my ending AR is 5,460. For my ADA, what are the three things that affected it? Yung BDE and recovery increased my ADA account by 6,300. But then the write-off lowered it by 3,240. So I had 3,060 in ADA. So now, my AR net would be 5,460 minus 3,060 is 2,400. So my AR net or yung lalabas sa financial statements ko would be 2,400. Na ang format is accounts receivable 5,460 less ADA of 3,060 equal to AR net at NRV of 2,400. So that's the reason why in the financial statement, AR will have a less allowance doubtful accounts of 137. Right? So it's a contra asset. So in summary, in allowance method, please memorize the journal entries when it's an estimated loss, when it's a write-off, and then pag recovery. And then its effects in the T accounts. So yung effects sa T accounts ng ADA, and then yung effects sa T accounts ng AR. So please take note na write-offs, lessen AR, recovery or written off accounts that were recovered increases your AR account. So in summary, your direct write-off method only accounts for actual losses. Allowance method accounts for estimated losses. And ang fina-follow natin is the allowance method. So to summarize that case study scenario, notice na nung estimate pa lang, ang nag-record lang is si allowance method. Si direct write-off method, since it's estimated losses, wala siyang recording. No recording. Sorry. So walang recording kapag estimate losses. But when it was actualized losses or parang deemed uncollectible, ito yung direct write-off, BDE, AR, pero ito yung sa allowance method. And then when you recovered, ito yung sa direct write-off, and then ito yung sa allowance method. Again, we need you to master how to write sa allowance method, pero you also need to understand the differences between direct write-off method and allowance method. For one, sa direct write-off method, ADA is 0. There is no such thing as an allowance for doubtful accounts. Lahat ng bad debts, palaging directly sinusubtract kay AR. So, in the exercises, when they ask you, what is the ADA under direct write-off method? There is no ADA in direct write-off. So, 0 lahat yun. Right? So, any questions with these two scenarios? Yeah, Russ, thank you. Yeah.
Sir, question. Do we get the same net accounts receivable for both direct write-off or and allowance method, or magkaiba yung results nila po?
Generally magkaiba yung results, and therefore sa direct write-off method, we don't, parang in accounting, it's not used because it does not follow the matching principle. If you were able to parang do it in the others, or if you can compare sa exercises, the ending AR will not be the same. So, yun, parang let's be aware lang on the nuances between the two. Pero let's not get parang let's not overfixate. Ang importante lang is we understand na si direct write-off kapag actual losses lang or already deemed uncollectible. Pero si allowance method, kahit estimate pa lang, they start recording already. So that's difference number 1. Difference number 2, bad debt expense, direct write-off method has no ADA or allowance for doubtful accounts. Yun. Was I able to answer your question, Ross?
Yes, sir. Thank you, sir.
Thank you. Other questions. So, ito medyo conceptual pa rin. Yung mas importante sa short probs, ito na yung susunod. So, please, bago tayo umalis sa direct write-off method or allowance method, meron pa bang questions or clear na? Kindly thumbs up if everything's clear on your end. Okay. Sige. Meron bang isang tanong? Yeah, go ahead. Clarence.
Sir, yung question ko lang po sana is, if for example dito po sa sa allowance, if nabayaran na, ano mangyayari dun sa BDE? Will anything happen?
Sorry, we're talking about itong side na to, right? Clarence.
Yes, sir. Yes, sir.
Yeah. So, itong scenario, so si 61.1b and si 6.2c refer to the same scenario. So, ano yung scenario? Initially, kala natin deemed uncollectible si account Y at 1,300, right? So, we receive cash from AR that we previously wrote off, right? So, now, when we receive the cash, binabaan lang natin si BDE ng 1,300 kay direct write-off method. Pero kay allowance method, never nagagalaw si BDE. Right? Parang kapag nag-recover, ang gagalaw si ADA. Kasi si BDE technically represented na siya under ADA. Kasi diba, nag-debit tayo ng 5,000, credit ADA, and then si ADA na lang yung maa-affect. So yun yung important nuance sa allowance method. Yun. And then yung isa pang adjustment kay BDE, lalabas siya in the next few slides na I'll show you. Yeah. Was I able to answer your question, Karen? Clear ba? Or hindi? Okay lang.
Yes, sir. Thank you, sir.
So to just really complete the scenario, in practice, there are different ways for companies to estimate uncollectible accounts receivable. So in the scenario kanina, nag-list down lang tayo ng mga itong accounts na to mukhang hindi mako-collect. Pero hindi ganon in the real world. Mahirap kasi as a company, you'll probably have 50 accounts, 50 ARs, 50 claims, more than. And then you can't parang judge parang itong portion na to hindi ko mako-collect per account basis. That's gonna be hard. So kindly take note na since we're estimating uncollectible accounts receivable, we're only focusing na on allowance method. Iniwan na natin si direct write-off. So anything that will be discussed in this point forward refers to allowance method. Okay? So in allowance method, there are two ways to estimate your bad debt expense and your ADA. Now, depende on the method you use, iba yung makukuha niyong number. So, let's first focus on percentage of sales. If you're estimating in the percentage of sales, what your emphasis is would be the income statement relationship. Sales is what? Sales revenue. Saan mo mahanap ang sales revenue? Sa income statement. So your base for percentage of sales would be total credit sales and net credit sales. So the rationale in the percentage of sales is that based on past experience, may portion ka of credit sales na hindi mo nako-collect. Like for example, in year 1 of my business operation, I had 100,000 in net credit sales. After year 1, I was able to collect around 70,000 out of the 100,000. So 30% of my net sales were uncollectible. In year 2, I was able to sell 200,000 in sales revenue. I was only able to collect 140,000 in from the receivable. So I had 60,000. Now 60,000 out of 200,000 would be 30%, right? Yeah, so 30%. So because of your past history, parang roughly 30% of your sales would be bad debts expense. So ganun yung basis of percentage of sales. In year 1, may X percentage of sales. In year 2, X percentage of sales. And then you see a trend. And that's where the number will come from. Now, on average, our company loses around 30% of sales from bad debt expense. So, ang masosolve mo if you use percentage of sales is bad debt expense. So, it's income statement focus. So, if it's percentage of sales revenue, which is an income statement result, ang makukuha mong number is bad debts expense, which is again an income statement, an expense. Now, the second method of estimating an allowance is what you call percentage of receivable. Since receivable, saan ba makikita si AR? Sa balance sheet. So the emphasis of percentage of receivables is sa balance sheet relationship. So how do you solve for percentage of receivable? Either it's a percentage of your receivable, like 10% of my AR will be uncollected, or may aging schedule ka, which we'll talk about. So it classifies AR by age. So the older the accounts receivable is, the unlikelier it is to collect. So in percentage of receivable, ang makukuha mo hindi BDE, ADA, or the allowance for doubtful accounts, the ending balance of ADA. So in summary, this is the only important thing to take away. There are two methods in estimating your allowance. The first method is the percentage of sales. You get a percentage of sales, and that will give you your bad debt expense. So it focuses on the income statement relationship. So if it's the base is sales revenue, what you'll get is bad debt expense. On the other hand, you have percentage of receivables, wherein it focuses on the balance sheet relationship. So what you will get is the ADA, ending balance. So bakit importante to? Kindly take note na your BDE will directly affect your adjusting entry for the period. So if you have your BDE, makukuha mo na yung adjusting entry mo for the period, which is BDE ADA, debit credit. Your ADA naman will help give you your net accounts receivable. So we're solving, if we're using the different base, we'll get different items. Okay, I understand, medyo confusing pa siya. So let's look at an example, right? And then let's understand from there. Let's first go to percentage of sales. The first thing na I want you to master and memorize is that kapag percentage of sales yung ginamit yung base, ang makukuha nyo is yung bad debt expense. Again, percentage of sales, ang makukuha nyo would be bad debt expense. So for example, you have net credit sales of 1,000, that will be the base of your percentage of sales. And then according to estimates, 5% of your sales will be deemed uncollectible. And therefore, it's just gonna be a simple computation na 1,000 times 50. So you have a bad debt expense of 50. So scenario 1, let's assume that there's an ADA credit balance of 20 before the adjustment. So in terms of your T accounts ADA, you have a beginning balance of 20. And then ang na-solve natin is the BDE. So 50 BDE. So in this T account, saan lalabas si BDE? Inside. So you have a BDE of 50, so your ADA will increase by 50 credit. Therefore, your ADA would be 20 plus 50, you'll have 70 na ADA. So now, dalawa yung itatanong sa inyo every time may allowance method. What is the adjusting entry? The adjusting entry refers to your BDE inside. Here, BDE. Therefore, yung adjusting entry nyo lang would be debit BDE, credit ADA of 50. Kaya nga, credit to of 50. Right? We're talking about, this is an ADA T account, right? The next question is, what is your net AR? Your net AR, sa ending balance of ADA mo kukunin. So your AR is 1,000, less ADA of 70, kasi ito yung 70 nakuha natin. You get a net accounts receivable of 130. See the difference? So pag percentage of sales, BDE yung makukuha natin. And then, once nakuha natin yung BDE, we'll be able to plug it into the ADA T account so that we get the ending balance of ADA. Once we have the BDE and also the ending balance of ADA, we can do two things. Number one, using the BDE, we can make an adjusting entry already of debit BDE, credit ADA for 50. Ito yung na-solve natin. And then, since we got an ADA of 70, we are able to get the net accounts receivable at 100. Sorry, this is wrong. This should be 930, right? Yeah. So clear naman so far. So pag again, please, babagsak kayo if ma-confuse nyo tong, ano na to, itong theory na to. Percentage of sales gives you BDE. Okay? So now, let's look at another scenario. Same yung given, pero paano kung yung ADA before the adjustment has a debit balance of 20? So rather than a credit, it's weird. It has a debit balance of 20. Well, the way of solving remains the same. We get the BDE, and the BDE is a credit to this. And therefore, we'll be able to arrive with an ending balance of 30. So again, because we were able to use percentage of sales, we were able to get two things. The BDE of 50, and then the ending balance of ADA at 30. Since we have those two, we can do the two things that are usually required. The adjusting entry, which is debit BDE, credit ADA of 50, and then we'll also be able to get the net AR, which is, let's say 200 minus 30 is equal to 170, right? Or if we were to mimic the previous scenario, which was 1,000 yung given, it would be 970, right? So in summary, percentage of sales, when you use this method, you get BDE. So this is the equation to get it. And this BDE, pina-plug in natin sa ADAP account inside. And then since we know the BDE, we'll be able to arrive with the ending ADA balance. So bakit ko binigay yung two scenarios na yung isa debit yung start and yung isa credit? Because as you can see, nag-iba yung ending balance niya. So you have to be careful kung ano yung beginning balance ng ADA nyo before you adjust for your BDE. Right? So that's the first method, percentage of sales. Now the second method, ang difference niya is that, as the name suggests, the base is accounts receivable. So you'll have 50, pero rather than BDE yung makukuha nyo, ang makukuha nyo is yung ending balance na 50. So yung BDE, you have to compute. Sorry. So, sorry, nawala ata ako. Can everyone see the screen? And okay ulit yung connection. Can you thumbs up if people can see the screen? Okay. Thanks, Kai. So, yun. So, again, in income statement, in percentage of sales, si BDE sa loob siya nung T account. Sa percentage of receivables, nasa ending balance yung dinedetermine niya. And then, yung BDE you compute. Meaning kung ang beginning balance ko is 20 and I know the ending balance is 50, the BDE for this is 30. While this one, if yung ending balance is 50, I'll reverse solve and solve for my BDE at 70. Kasi to offset the debit balance. So in the example, when you have percentage of receivables, what you'll get is an ADA of 50. So in the T account, rather than going inside here, dito siya lumalabas at the ending balance. Since 50 yung ending balance natin, we'll have to solve for ano ba yung BDE adjustment for ADA for the period. So since 20 to and gagawin natin 50, we need a 30 na credit account. Since we completed the T account for ADA, we use this entry to create the adjusting entry BDE 30, ADA 30. And then at the ending balance of 50, so 1,000 minus 50 is equal to 950, right? And then the last scenario would be, again, yung 50 dito sa baba lalabas, even though debit to. And then here, since this is the debit, we need the 70 credit. And therefore, the adjusting entry instead would be BDE 70, credit ADA of 70. And then, again, it's still 950, right? So, in summary, in percentage of receivables, what you're solving for is your ADA ending balance. Naalalabas siya sa T account dito, outside. And then, you solve for the missing X inside, which is the BDE. Another way of solving for percentage of receivables is what we call aging of receivables, wherein yung AR balance is broken down into different categories, like how old they are. So 500 out of the 900 is 15 days or younger. The others are 16 to 30 days, 31 to 45 days, and beyond 45 days. So the idea here is that for each category, there is a percentage of uncollectability. Again, please be careful. Dalawa yung pwedeng bigay sa inyong percentage. Percentage of collection or percentage of uncollectability. Since we're talking about bad debts and allowance for doubtful accounts, we're looking for percentage of uncollectability. So the aging of AR should always total the AR balance, meaning ito, if we add all of these together, should equal to the total AR. And the older the AR, the less likely it is to collect. So if it's beyond 45 days, it has 80% of uncollectability, versus if it's just 15 days, may 2%. So basically, if you do the table properly, you just multiply 500 to 2%, 10,000, 200 times 5%, 10,000, 150 times 50%, 75,000, 50 times 80%, 40,000. So your ADA is 135,000 if you add all of these together. And your AR net is 765,000. How was I able to solve for this? Because it's 900,000, the total AR, minus my ADA, 135. My net AR is 765. So basically, ito lang yung gusto ko maging focus of our lesson for today. So we'll end with aging of receivables. And then the following examples. So let's say na you're estimating an allowance. So our Sipaj company had the following balances of December 31. We had an AR of 276,000. Allowance for doubtful accounts at 8,500. Since it's silent, we assume it's credit. And then net credit sales of 1.25 million. Now, what if there are two ways or two scenarios. What if the company uses a 0.5% of net credit sale estimation method? So the first method will fall under percentage of sales. Percentage of sale will give you your BDE. So our net credit sale is 1.25 million times 5% or 0.5%. That will give us a BDE of 6,250. Now, this would be our adjusting entry, which is BDE ADA 6,250. When we do the T account, there's an 850 balance. Yung BDE, saan papasok? Inside or outside? Since sales, it's a BDE, it will be inside. So 85 plus 6,250 will give us 14,750. This 14,750 is your ending ADA balance. So if our AR is 276,000 less ADA, it's 14,750. The net AR is 261,250. The next method is percentage of receivables. Now, ang binigay sa atin is percentage of collectability at 98, 95, 50, and 20. So, we get the percentage of uncollectible. Since 98% yung collection niya, 100 minus 98 is 2%. 95, 100 minus 95, 5%. 100 minus 50% is 50%, and 100 minus 20% is 80%. And then these are the following balances. And then, very procedural, multiply each. So now we know that we have 12,900 in ADA, and our AR net is 263,100 because that's 276,000 minus 12,900. Now, in terms of the T account, ito yung T account natin, right? Saan papunta si ADA? Sa labas. So, yung 12,900 is an ending ADA balance. So, therefore, we have to solve for our BDE, which is 12,900 minus 8,500, 4,400. So, therefore, since ito yung BDE natin, ito yung journal entry. Debit BDE, credit ADA, 4,400. So, that ends our percentage in estimating allowances. So, I know na it's kind of hard to absorb right now, but please, ito yung crucial for your quiz 1 for AR. Please, wag niyong hahayaan na hindi niyo gets what BDE and ADA is. But generally, your BDE will give you your adjusting entry, and your ADA will give you your net AR. Please remember that. Second, pag percentage of sales yung gamit, it will give you your BDE, and yung BDE sa loob ng T account papasok. And then you solve for the ending balance of ADA. Sa percentage of receivables, baliktad. Ang masosolve nyo is ADA, and that ADA is nasa labas ng T account as the ending balance. And then you have to solve for your BDE that's missing. And then another way of solving for percentage of receivables is aging of receivables. Kindly take note of these 3 things. Na we need the percentage of uncollectability so that we multiply each classification per percentage. When you total, it gives you your ADA. Yun. So for the last 5 minutes, I will just quickly go over disposal and also credit card sales para lang I'll be able to discuss with you all the things you need to know to answer your exercises. Ang litmus test ko sa inyo is that dapat perfect nyo na yung exercises coming in sa Thursday so that on Thursday, we'll just really focus on mastery. Right? So, quickly, so we're done with subsequent measurement. The last step is disposing of AR. So, the question is, why would companies sell their AR? Sometimes, low na yung liquidity natin, meaning we need cash. Pero as long as we have receivables lang, hindi naman natin to pwedeng we can't use receivables to pay for accounts payable, right? So, sometimes we need cash right now. And therefore, the only remedy that we have is to sell the AR. Other reasons would be collecting AR is troublesome. On average, some companies have like 110 days to collect AR, like for oil and gas extraction companies. So since ayaw nila maghintay ng 110 days, they sell their AR. The way to sell your AR is either by discounting or factoring. But the idea here is that for discounting, who collects the AR? Si company pa rin. Right? Pero sa factoring, the one who will collect the AR would be the factor or the bank or finance company. So in discounting, the company receives cash immediately, pero they by obtaining a loan against company AR. So yung AR natin collateral. And then sa factoring, we sell the AR to a factor or to a bank or a finance company. So the difference lang here is that who collects the AR? Pag discounting, it's still us, the company. Pero pag factoring, it's the bank or the finance company. So who collects the AR? Ito lang yung journal entry. So this is an example. We wanted to sell or dispose of our AR through factoring. So credit AR 500 and then may service charge expense of 2%. And then which is 10,000, and then the cash that we received is 490,000. So as you can see, the trade-off of disposing AR is that we get cash kaagad, but not the full amount. If we waited, we could have possibly gotten 500,000. But since we wanted the cash now by factoring, we paid the factor 10,000, and then we only received 490,000 cash. So the last concept, the last two concepts na I'll quickly go through lang would be credit card sales and yung AR turnover, like similarly to inventory turnover. So for the credit card sales, basically tatlo yung parties to a credit card sale. You have your credit card issuer, your customer, and your retailer. So basically what happens is the issuer investigates the customer. So check niya si customer. Kung mukha namang maganda yung credit ni customer, the credit card issuer will give them like a GCash credit card. Now, the customer can pay the retailer using a credit card, and then the retailer receives the cash fast because si credit card issuer yung magbabayad sa kanya. And then, so si issuer will undertake the collection. So in essence, pag nagbayad kayo ng credit card kay retailer, si retailer makukuha niya kagad yung pera from the bank. Si bank yung magkukollect ng credit card bill niyo every month, right? So in essence, when you have credit card sales, kindly take note na the bank takes a service charge expense. So we have a new account na every credit card you have, kailangan separate yung AR. So hindi lang pwedeng AR, kailangan debit AR credit card. And then take note of the service charge expense every time they collect for you. And then credit sales revenue. And then when you collect the cash from the issuer, debit cash, credit AR, credit card. So, for example, on May 1, we had a credit card sale with a service charge of 3%. So the journal entry would be sales revenue of 5,000, but our AR is not 5,000. We first have to solve for service charge expense, 150. So our AR is 5,000 minus 150. And then, pag na-collect na natin yung amount, we just debit cash, 4,850, credit AR, credit card of 4,850. And then the last one is, how do we present AR? Basically, we present AR as net. So it's AR less ADA is equal to receivables net. And these are the following formula. So AR turnover is a tool to assess liquidity. It measures the number of times on average the company is able to collect AR during the period. And then similarly to inventory turnover, you have what you call average collection period, which is basically 365 days divided by R2. So in essence, this is just an example. So how do you determine AR turnover? First is you get the net credit sale, and then the only thing you have to take into account is that you take the average AR. So how do you get the average AR? 276 minus 12,900 is 263,100. 225,000 minus 85 is equal to 216,500. This is the beginning balance of AR. This is the ending balance of AR. We average that. The average AR is 239,800. So in essence, the simple solution is net credit sales divided by average AR is equal to 5.21. And then your average collection period is just basically 365 divided by 5.21 is equal to 70.2 days. So that basically ends parang everything that we need to know about AR for the quiz. And then for next week, we'll talk about notes receivable. So don't worry if everything's unclear. Please revisit lang this recorded lecture. Go back to the examples that I shared with you, and then understand the different nuances. And then from there, your litmus test is answer your exercises. Now, the exercises are designed to be hard so that hindi na kayo masyado magulat sa quiz on how hard it is. So please don't make sure na when you submit your homework, almost perfect kayo, if not perfect. Yun. Before I end the recording, are there any questions from the class? Yeah. Kindly thumbs up if everything's okay, so that I can officially end the recording. Again, just to end with the admin stuff, Thursday, 10 a.m., deadline for AR exercises. You have unlimited attempts. Next, we will have quiz on Monday next week. Kindly let me know if there's any conflict ahead of time para ma-heads up ko na yung department. And then number 3, you were supposed to get the class standing na last night. If you want to consult after this class, feel free to stay so that we can talk about anything na you want moving into the second part of the set. So yun lang naman. Thank you so much everyone. If there are no more questions, I'll officially end the recording.